So I'm here joined with Ed Nwokedi. He's the founder and CEO of RedSwan. Ed has been in the real estate game for quite a period of time, and he's now leveraging technology to transform this industry. Ed, we've been talking now for a couple minutes, and I've known you for years. Why are we even in this game? What's the problem with real estate? Obviously, the market's going nuts right now. What's your take on where we're at?
You know, real estate has always been a game for the extraordinarily wealthy, and because people are so wealthy, they don't need access, to capital as much because many people are throwing capital at them. It's those who don't have that kind of access that really need to be able to buy into quality capital, and it's never been available to them. Access to high quality assets has never been available to the average investor. But when you think about the average investor and looking at the global pool as well as the international pool, that's trillions of dollars of capital that could be coming into real estate. And right now is a perfect time for that to happen because, the institutional capital that we once have been really reliant upon, like when I was a broker, I pick up a phone to sell an asset. I only had to make like 20 phone calls. I'd call, BlackRock, I'd call KKR, I'd call Starwood, and they jump on it and they'll make an offer. And I make them, step up a little higher, right? And then I close the deal out and on to the next one. But it was always a small cadre of investors who would come to the table to buy these beautiful assets because they had the deep pockets to write those big checks. Well, look where we are today. I mean, they've made a lot of money, but now people are starting to lose a lot of money. People who invested in these institutions hoping for a longer term gain are starting to see interest rates increase and real estate property values decrease. And that means the investments they've made in real estate over the past few years has probably dwindled down a little bit from where it was in the heyday. So is that good? No, it's not good. It's never good to see property values go down, but man, it's really a good opportunity to buy properties at a lower price point. And at some point, we had to have this adjustment where people can now get in at a good value and watch it ride back up. If you're buying at a 2% cap rate at the various highest part in the marketplace, you're probably a little uncomfortable about where it could go. You can't go from a 2 cap to a 1 cap to a 0 cap.
Right.
Very hard to do. So seeing that 2 cap now bounce back up to a 7 or 8 cap tells you that's a great place to really re-enter the marketplace. And I think RedSwan is really providing that access, making it really easy to simplify the process of investing in real estate, especially high quality real estate, by having it at your fingertips and be able to transact within minutes as opposed to months.
So is the idea now that with the technology, it's now more feasible for the average person to get involved? Or is it that potentially institutions are over leveraged, which presents an opportunity to capitalize on that by new fresh capital or new investors? Why is now the time to get into the commercial real estate sector?
Well, one, they are over leveraged, right? Banks are no longer writing checks like they used to. They're very skittish about getting into new deals. Why? Because they're overflowing with bad debt right now, and they need to get back to having a safe margin, a cushion. That's why banks would invest, 75% of the capital stack as opposed to 100. They always wanted to have that cushion, so if things went bad, they still have the upper hand. Well, now if you kind of look at interest rates where they've gone from the 2%, 3% to 7 and 8%, that cushion's gone. They're sometimes 110% owner of these assets, which puts the property owner in a unique situation because they have no more equity left and they don't want to take care of an asset that's losing money, so they hand back the keys. Well, if you were able to inject new capital coming in, help the bank by giving them a relief, taking their loan off this asset, giving them cash even at a short sale, you're now coming in position of the bank. Our community members are coming in the position where the bank used to be at a lower value. That's a perfect position to be in for real estate. And now to have the access and the ability to fractionalize that into a price point that you can afford, we'll call it $25,000 or $10,000 or any price point that you can afford, makes it easier for you to be involved and get access and be successful in real estate. So I think now is a good time.
So you're taking essentially a bunch of individuals that are coming together, and then you and your team are then negotiating that deal on their behalf to really capitalize on this opportunity where cash is king, right? So talk about a little bit about your background and how you've negotiated some of these deals in the past to get a good feel for how a real estate deal comes to fruition.
Well, I've been in the real estate industry for 20 years and 17 of those years with Cushman and Wakefield and Colliers. So I was at the top of the food chain selling mostly institutional quality assets to institutions, high net worth individuals and family offices. So we know the value chain of real estate and we know a good deal versus a bad deal. I kind of jumped out of the industry when interest rates were as low as 3% because I could no longer look my client in the eye and say, you're going to make money on this asset. I can almost guarantee that. I couldn't do that anymore. But now I'm back into saying that our clients coming in are definitely going to be successful on buying real estate when you're taking the price point down, 25%, 60% the valuation and price, and you're taking out the lender. Those are
Really?
that reduces the risk on real estate, significantly. I won't say 100%, but significantly reduces the risk when you have no lender involved and you're now buying in at a discount to what the value was yesterday or last year.
And so how are you figuring out which properties to purchase and understanding where the opportunities are in this market? What are you looking for? What factors are important to that decision?
Well, we're vetting the assets to make sure the sponsor has experience, knows what they're doing, been doing it for a long time. And most of the sponsors we work with have not just one or two assets, but $500 million to more, a couple billion of assets. So they're experienced, they know what they're doing. Look at the feasibility of the asset in the marketplace to know if this is a property that can turn around because there is a market there, there's demand there. And then understanding where the interest rates are with the project and where the cash flow is with the project to see if there's continuous demand coming. And if is it cash flowing right now in order to give our shareholders a decent return. These are the types of due diligence we look at and before we would accept a project. And in many cases, when it's a large portfolio with multiple assets, we will bring in experts like EY or Cushman Wakefield to do evaluation so we can make sure we have a third party saying this asset is at a good price point.
And so I want to stick on that even further and dive in. What kind of trends are you seeing in the market right now? Certainly CRE is a very large asset class in general, and there may be different templates for the types of properties or types of opportunities that you're looking for. Is there any specific trends that you're seeing that are the real opportunities that you're looking at? Or is it really generally agnostic with respect to location or the type of tenant that they're working with? What are some of those things that you're looking for?
Well, trends we're seeing, I focus on a couple product groups, multifamily, for example, office and retail and hospitality. And so with COVID, post-COVID, you saw offices having significant problems with occupancy, right? So on average around the nation, we're seeing 30% vacancy rates in office buildings, which means they're having a hard time making profitability. 30% of your revenue being gone puts you in jeopardy in terms of profitability. So there's a lot of stress in that marketplace. In hospitality, they were down for such a long period of time that they had lots of debt piling up that now has to be paid off. And so they're really trying to come back from the woes of the COVID. But still, location is important. Are they servicing the right size audience? Do they have the right size product? You see a lot of hotels that have over 400 units, 400 units, hard to fill up 400 to 1,000 units in today's market, right? So These are things we look at in terms of where the opportunities are. Can we take a hotel that had 1,000 units, 1,000 rooms before, and now break it into multiple types of opportunities, office, residential on the top, retail on the bottom. These are the type of things we look at to determine what's a good investment for our clients.
Interesting. Very cool. And so now let's move to the other side. You're using technology to transform this process. Can you just give us a high level of what types of solutions that you're working with that are making this process more optimal, whether that's by fractionalizing or managing the back office?
Sure. Real estate has always been illiquid. So there's a fear about parting with your $500,000 onto one asset and then hoping that in the next 10 years, you can get that money back with a return. That's been and so when you have a lot of capital, you can take that risk. When you only have $500,000 or less, that's a tough investment to make. And many people don't make that investment. I think by using our technology now, not only do you have the access to see these assets, but you can now take that $500,000 commitment down to $25,000. You can take $500,000 and spread it amongst 10 or 15 assets to lower your risk. And so you also have the direct transparency to exactly what you're buying, as opposed to just following the brand who tells you, give me your money, I've been doing this forever, we're going to give you back a return, and you don't really know what's going on. With blockchain, it gives you the transparency to see the financial statements and know what you're getting, but also that $1,000 or $5,000 or $25,000 is going directly into the equity of that asset. Not a big load fee you have to pay to come in and another load fee you have to pay to get out. Your money is going directly to the asset, which I think is better for an investor because you have more being invested, which means your money is working for you. More of your money is working than less.
Okay, so we've got the blockchain component, and that's a word that, depending on what part of the market cycle we're in, is either really exciting or really scary. I think that you and I have both been in this industry long enough to know that it's really exciting regardless of the market cycle because of the benefits. But I think that we always really need to try to hit on what are the business cases of leveraging this technology. So, first off, like, what blockchain are you using and what is it useful for?
Yeah, blockchain, first of all, we have to just differentiate blockchain digital assets, real world assets from blockchain cryptocurrency. Many people hear blockchain, they immediately think you're selling cryptocurrency. We don't sell cryptocurrency. We will take in the cryptocurrency, the US dollar cryptocurrency, but we don't take in Bitcoin and Ethereum, and we don't sell that either. And we don't give that to our clients. So first of all, we have to make sure people understand that we're using blockchain just to take a hard asset like real estate and fractionalize it into digital securities, because we realize that we're selling a security as we're selling an investment property. So that's totally different from cryptocurrency. So once we understand that, now you're trying to make a decision as to which types of assets that have been converted into securities that you want to invest in, and have you done your homework to understand what you're getting. And we think that our platform allows people to do their homework, shop around, look at assets, look at the financial statements. And then when you're ready to make a buy decision, you can now buy a fractional share. So you don't have to put all your money into one asset. You can buy a fractional share of various types of assets that you like and continue with that process. And I think that, if I was 15 years old and I used to take my money from my paper route and put $100 a month into a piece of property back then, I'd be extremely successful right now, because that means I'll be owning, quite a bit of real estate that's improved in value over time. And this is the opportunity I think we're bringing investors right now who never had that opportunity before.
Yeah, I think that's interesting. And just from a words perspective, I always like to talk to people whenever we're covering some of these deeper topics. It's always important to recover our definitions to make sure everyone's on the same page. So I've heard the terms digitizing and tokenizing all the time. We use them all the time in the office and with clients and back and forth. But for anybody listening, and really I want to hear your perspective, is there a difference between those two things? What does it mean? Are they the same thing? What are your take on that front?
Tokenizing and digitizing are similar, are the same. I mean, basically you're taking, like I said, a hard asset. I could take this computer set and know that I have the title, the receipt to this computer that I'm looking at in front of me, and I know this worth $500 to the computer. I can take this same the receipt and digitize it, because I'm the owner, and make 10 shares of my computer. And I can sell each share for, a tenth of the $500 value, so $50. And so what I'm basically doing is allowing you to have a title to $50, 1/10 of my computer, for whatever that's worth to you. We choose to use real estate. So we take real estate equity. That means that you're taking the net equity, that's the real estate value minus the debt. You have the net equity that's there, and dividing that up into shares, so that the sponsor can get some of his capital back, because too much capital is trapped in real estate until it's sold. But this way, he can pull his capital out of the asset while it's still moving forward, and then deploy that to other assets, which is beneficial to the sponsor. But for the investor, they can put their money directly into shares of this asset or other ones in a fractional method. So when we talk about tokenization, we're just saying we're fractionalizing the shares, the ownership, and putting on the blockchain so that you can prove that you own that piece of this asset.
Right. Okay. So that makes sense. And so you spent a lot of time at Cushman & Wakefield doing the real estate game the old way, right? The old fashioned way, the inefficient, the dumb way, if you call it smart assets these days, right? So how long would it take for an independent valuation firm or even a company that's managing real estate to do the process that you just described for an underlying property?
Well, that's a good question. I mean, to close a deal, when I was selling deals, and I've sold over, $2.5 billion of deals on my team, a deal could take 6 to 9 months to close. So from the time that you tour that property to put it under contract, to do your due diligence, to get your capital to close it, that could be 6 to 9 months before you actually have ownership and your shareholders have ownership. On using our technology, a person could come on board and have ownership of the company within 15 minutes. If they're already approved, of course, the KYC, within 15 minutes, they can own a fractional share. And that doesn't have to be just a small fraction. If they want to buy the entire allotment of shares available, they have the capital, they can own a substantial share of a piece of property in 15 minutes. That's a major difference.
And also just, I guess, the access to all the documents, to the valuation mechanics, all of those pieces are extremely streamlined through this process too, right?
It is. And when you look at selling, that's also a major benefit. When you buy into a piece of real estate, you have to wait for the sponsor to be able to put that piece of real estate on the market, get somebody to buy it. That's another 6 to 9 month process of selling a piece of real estate so you can get liquidity, right? And you never know when that's going to happen. Today, we're in a market where you can't sell. If you want to get your price, you're going to sell for a discount in today's market. So most people are not selling unless they have to. But if you have your own shares as you bought tokenized real estate, your shares are now being held in your digital wallet. When you want to sell it, you can say, hey, Ed, I want to sell my 1,000 shares of XYZ property. We put it on the exchange, let now hundreds of thousands of investors look at your offer and make a bid. You can get liquidity within 15 to 20 minutes if you price it properly. But that capability has never been available to investors since the history of real estate being sold. So I think that's a significant benefit for investors buying digital real estate over non-digital real estate.
That's fascinating. And I think that it's really cool to see that you're already doing this. Can you talk a little bit more about the properties and investors and the kind of the flow that you've already built with RedSwan so far?
Yeah, so we started off the same way with the broker mentality. We tokenize an asset and then we go find investors to buy the asset and close it out. And we did that 3 or 4 times to proof of concept. But we realized in order to scale the business, it wasn't about having the broker mentality, but having more of an enterprise mentality. So then we just went off to take projects that we knew were good assets. We vetted them and we tokenized and put them on our platform. And now we're actually starting to talk to the larger end users, the Goldman Sachs of the world, the major players who are distributing shares to their customers by the billions on a daily basis, because we think that they have an enormous appetite to convert their traditional brick and mortar analog shares into these digital shares so they can offer their customers that liquidity as well. And we've been having these conversations with these large companies, and they want that type of asset class to be on their books. They don't want the headache of having to have a redemption process and having people say, I want my money back, and them having to figure out what the price is today and then cutting the check once a quarter. These companies don't want that. They'd rather have you have the same benefit of going to the stock market and saying, hey, I have 100 shares of Apple Computer. I'm going to call my broker up, or I just do it on my cell phone. I'm going to sell my 100 shares at the market price. Most real estate property owners and developers rather have that capability. And the only way you can have that is through tokenization.
Interesting. I love that. So let's talk a little bit more about RedSwan. How long have you been in operation? Could you walk us through the background of the company and your goals for this year and moving forward?
Well, we are just past our 5-year anniversary. So
nice.
We started in 2018 and now it's 2023. So we're moving towards our 6th year in business. And I'm really happy the fact that we've grown our team. We've started a security token. That's you. We started a RedSwan markets division, which is our broker dealer division and our IRA division. That was extremely important because in order to be in this business, you have to be legitimate. You have to make sure that you have the licensure in order to do business. So that was a key focus for us, was to get approved by the SEC and also FINRA. So that's now behind us now. And also having a team that is really dedicated to that side of the business is also important. So we can focus on what I know best, which is real estate and getting high quality real estate product, and then passing it over to the broker dealers to focus on distributing that in a regulatory fashion to customers. So that's important. I'm also finding that since we've evolved, that geographically is important to spread out, because real estate is worth trillions of dollars, $320 trillion around the world. And so just focusing on the United States is not enough. There's countries in Canada, countries in GCC, countries in Africa, they all want to get in the game and tokenize. And we want to make sure we plant our seeds in markets where we see a high level of adoption to digital. And so we opened our office in West Africa, Lagos, to cover the entire continent of Africa. And that seems to be doing extremely well in terms of visibility and the kind of relationships we're putting together there. We're talking to the real deal makers, the financial markets, the stock market members. So that's going to be a great distribution channel. But the GCC as well. I mean, that's a very untapped market, but it's producing extreme profitability that we haven't seen in the United States or in some of the developed countries in a long time, because they're rapidly growing. And so I enjoy that market, because when I look at those assets, it's all cash. They don't have a lot of debt. So they're not having the same problem we're having here in the United States with too much debt that's falling down. They didn't use a lot of debt, so their assets are really collecting cash and paying out cash dividends. And now they're opening it up so that the rest of the world can invest in that part of the world, in Dubai, in Qatar, into Abu Dhabi. And so we think that's a great opportunity for RedSwan, and we already have planted seeds in that market as well. So these are some of the things that we're doing that we think is going to really keep us in the market leading position, but also have the ability to really scale. Because when we talk about scale, you have to have the pipes and the platform to scale. Otherwise, you're going to fail rather than scale, right? So if you were saying you want $1 billion for the business and you get it tomorrow, and you don't have the pipes and the people in place to process it, you're going to fail. But if you're already planting your seeds and building your mothership so that when you do get that assignment for $3 to $4 or $5 billion, you can process it. That's where we are right now, is making sure we have the capability on the pipes to process large business.
So you're building all of the operational flows, and you certainly have a lot of the real estate that you're working through. And maybe we can talk about more of those real estate assets moving in at the end of the interview here. But before we get into that, you also are exploring a capital injection to help grow and scale the business. So could you talk a little bit more about the crowdfund and things that you're building through that?
Yes, we'd love to. We are raising capital, $5 million with the Reg CF, and we're doing that because we think operating from a position of strength is better than operating from a position of weakness. And we have good cash in the bank right now, but in order for us to really keep scaling and like I said, geographically planting these seeds to make this large enterprise, we have to have capital. We have to bring in good people to join our team to help with the bandwidth. So raising this money is really what we think is our last major raise. I mean, I could be surprised with another major strategic capital investment, but I think once we have this on our belt and we start turning on our revenue, because we're getting revenue right now, but turning on more revenue, we probably won't need to raise any more money. So we're really thinking about how to preserve the value for our current shareholders so their value just takes off and goes to the roof. And by having this small Reg CF of $5 million allows us to bring in a little bit more capital to support our growth, but then to turn on the faucet of institutional business and also private business that we see right in front of us.
And could you walk through the differences between a Reg CF deal versus a Reg D, or something more that would
Sure.
be familiar for someone?
No, a good question. So Reg CF is crowdfunding and is regulated so that you can go to your average non-accredited investor. So people who have less than $1 million in overall asset base or making less than $300,000 a year can still invest in RedSwan and take part of our journey. Whereas a Reg D investment is for accredited investors. And even we're selling on our platform, it's Reg D investors in the United States. And those are investors that have to be accredited, which means they have to have a balance sheet of over $1 million collectively between themselves and their spouse. And or they have to have at least $300,000 of income per year to be qualify as Reg D accredited. So this is going after the average person that doesn't just left out, the person that really can't get their money into emerging company because those of these regulations. we're opening the door and letting them come in because we think they're getting two things. Not only they're just joining a company that's going to take off in this beautiful space of digital real estate, but also access. I mean, access to the real estate investments. You're going to, in our business for real estate, the brokers are the ones that everyone seeks after because we know where all the deals are. So we get all the phone calls from people who want to invest. Show me where the deals are. Show me where the deals are. They can't get enough of deals, right? Well, if we're allowing all these smaller investors who don't have that access to plug in now, and they're getting direct access to deals that are all around the world, hey, you know, that's very, very attractive in terms of investment. That's like being a member of the club, the Gold Club for Cushman and Wakefield. So as the investments come in, you're seeing it firsthand, and that's where you really get the best bang for your buck, is having that information flow.
Right, right. And so you're, as a crowdfund investor, they're buying into equity into the company of RedSwan. And so talk about how RedSwan makes money. Are you taking a portion of the properties that sell on your platform, or is it a cash style of business and it's just a cash flow, and then you build equity as you raise more capital through the business? Could you talk a little bit more about just how that investment works?
Yeah, our revenue model is kind of simple. I mean, first of all, we take on an asset, and that asset has an owner who wants to raise capital. So the minimum for us is $10 million. So a person gives us an asset that says, raise me $10 million. Well, when we're successful raising that $10 million, we get a fee associated with that, somewhere between 4 and 5%. To take on that business, to do the analysis, to tokenize it and convert it from analog to a digital asset, a digital security, we charge an engagement fee. So right away, they're writing us a check, very similar to what they do for new loan originations. You put a deposit down. And then we have the asset management capability with our RA license, registered investment advisor. We're able to charge an annual asset management fee for all the tokens that we create for all these assets. And that's because we provide a service on that management in terms of K1s, assisting with the K1s at the end of the year, assisting with dividend distribution, assisting with any voting and corporate communications. These are things that we help the sponsor with in order to give value to the investor and transparency to investor. So that's another small fee that we would charge, which is asset management. And then taking it to the final step, which is the ATS for liquidity. This is the exchange. So when you now want to sell, 100,000 of your shares and you want to exit, you bring it to me. I hand it to our broker dealers. They put it on the exchange. They market it. Once they sell it, they have a small fee they would take for selling your asset off. So those are the revenue streams of RedSwan collectively. And so we think that's, we're moving trillions of dollars and managing trillions of dollars of real estate. That becomes extremely profitable cash flow.
Sure. And so you mentioned a couple of licenses there. Can we talk about that? Because that also has a lot of equity value in owning the licensure to be able to operate in all these things and understand the business flows. You mentioned the ATS. Maybe people don't actually know exactly what that is. So which exact licenses do you have in your flow that you own versus maybe who you're working with and partnerships with? Just talk a little bit more about that broker network as well.
Yeah, so appreciate it. We have the IRA license, which is a registered investment advisory license. We went after that in 2021. We were licensed with that. We awarded it. Then we decided to go after our broker dealer license, which is, so it allows you to now sell.
RIA lets you take people's money and invest it on their behalf, or that means you can recommend them things to invest?
You can recommend things for them to invest, and then you can charge them an asset management fee once they invested. So you're managing
what they invested in.
Yeah, so you're managing a pool of investments. So it gets you in the process, and we can then work with our outside third-party broker dealers, let them make their fee off of that from our recommendation. And we get a fee for like processing, creating the technology and all that kind of stuff. But we decided we wanted to make sure our customers didn't have to leave our domain to get service. So having a broker dealer license now allows us to issue the securities and trade them on the secondary market. So we just got our letter from the SEC a month ago that said we're approved by the SEC. And now the final thing we're doing is having an interview with the FINRA, because you have to be a member of FINRA, to show them our technology so they can see how it works. And we had that already. They were very pleased with the technology. But that's a learning process, is to be able to articulate to FINRA how you actually do this and where the safety checks are for a broker dealer to make sure that your clients are being well taken care of in terms of custody, in terms of processing. So that's the meetings we have with FINRA to kind of get that done. And then the final piece is, we're building an ATS. That's one of the capital developments we're building, is an ATS, alternative trading system, that allows us to sell shares for liquidity. And we have the manpower in our RedSwan markets to do that. But we're going to have to go back to the same FINRA group to show them the ATS, how it works, and get approval for the ATS so that works as well. So that's the last leg of what we're doing, to have all the licensure to provide service from A to Z, which I think is extremely important.
Totally. It makes a lot of sense and is important to keep that stack together so that your investor survives the entire life cycle of the asset. And so with that ATS, with that transaction on the secondary market piece, this is, I think, what everybody gets super excited about. They think that this is, a huge potential opportunity, but we have seen a lot of people try to varying degrees of success. So what are your thoughts around how to actually build a marketplace that can be thriving and helpful? Is it more of a positioning play where you just need to build that trust over time? Or are there some additional pieces that we can layer in, or different ways to look at it that may drive additional liquidity to those secondary markets?
Yeah, well, I think trust and authenticity is important, because first of all, you have to have properties that people can trust are real, authentic, and they're not like, somebody woke up today and said, I'm going to build a hotel and never done it before. We would never put that on our platform. So trust is having the quality sponsors with their properties that are good properties on our platform. And that just takes people doing their due diligence. I think also having partners who are helping you with the process to put their rubber stamp along your process is also assuring for investors. For example, having EY on our team to review and put a stamp that they've done a comfort letter on the asset, or having Cushman & Wakefield do an appraisal and saying they've appraised the asset and it's a value, that also is a symbol of strength and trust, because we're bringing third parties that you recognize to do this kind of authenticity.
Right. And it's a little maybe easier to value, right? Because it's not a startup equity where, the valuation could be anywhere, right? These are real estate properties where you can get a little bit of a better understanding of what the cash flows would be discounted at.
Correct. Always good to have third-party verification that's bigger than you are, so that people don't second guess your judgment. And so we do that by bringing these experts in. So I think the partners that you work with help you build your company. And I'm not saying that we've found all the best partners, but we have a lot of good partners. We just signed with Hedera Hashgraph, and Hedera Hashgraph is asking us to tokenize real estate in their ecosystem. So that anybody who has Hedera currency or is in the Hedera ecosystem and wants to tokenize their asset to offer for sale, RedSwan is now making that happen so that they can tokenize in Hedera. And that's a big deal, because Hedera has millions of users in its ecosystem, and they want to use the 8-bar as a means of their utility. And so by us partnering with them and providing that opportunity, we're now adding that community to the RedSwan community. And I think that's powerful.
Could you talk a little bit more about Hedera? I'm not sure that our audience may or may not have heard of Hedera Hashgraph. For those that don't know, it is a distributed ledger, and it's a blockchain protocol or platform, but I know that they have some interesting mechanics, so I don't want to speak too far for them. What got you excited about working with them, and what do you think that technology brings to the table?
Well, first, they're larger. It's a larger layer one. So they have been around, one of the first layer ones to come to the market. I think they were valued at $800 million when they first came to the market, and they've expanded their value since then. But they were smart in terms of the protocol blockchain, distributed ledger technology they created was on a hearsay model that really makes it easy for decisions to be made, right? And so I won't go into all the details, but basically is a very trusted platform that that what goes in is actually the truth, and what comes out is actually the truth. That's why they're so successful. But we like the fact that they are also geared towards institutions. They have a 34-member governing council that helps make decisions on behalf of the entire ecosystem. Some people have a DAO where it's self-directed investment members, but this is major institutions like Microsoft, Nomura Securities. All these big names are on their council. We think that's the way the world is moving towards, having institutions be able to give them advice to make them more acceptable around the world. So by having them as a customer, it gives us not only exposure to their end users, which are individuals, but also visibility for those major corporations that are running the world. They get to see what RedSwan is doing as well. And we get to hopefully service them with their needs for real estate tokenization.
Do you see the fractionalized model bringing in accredited investors and potentially retail investors through your crowdfund into these real estate mechanics is really what's going to drive additional institutions to pile in and add on to that process to really revolutionize the capital stack across the industry?
I do. I think institutions had a lot of fun going after the bigger pockets, and that was their level of reaching out, was to basically the larger family office institutions invest in them. But I think that they're now looking for a new level of investor, more the average investor to come in at a lower price point, and also to tap into the global investor. I mean, we've always been just centric about United States investments, and all the top investors are family offices in the United States. There's trillions of dollars globally that love the United States, would love to invest in United States assets. And I think RedSwan is able to really make that happen for them, because we're already marketing to the globe in terms of going through Hashgraph, opening in Africa. We're making those people visible to the opportunities in the United States. And on the other hand, as we tokenize in those markets, we're making those assets visible to Americans. How many Americans know about the high rises that are in Lagos, Nigeria right now that are housing Microsoft or Amazon? How many people even know that those exist out there that they can invest in? We're bringing that to the table as well.
What are the return profiles of an asset like that you're describing? A high quality commercial office building, but maybe perhaps in Nigeria, a more overlooked market. Does that present a higher return profile for a similar tenant?
It does present a higher profile. So, and that's the fun part, is that you get to see the exact same asset in Manhattan or in San Francisco or in Los Angeles that is driving a yield, let's call it 8% cash on cash yield with an IRR of, call it 15%. And you're seeing something like this that's in South Africa and Johannesburg or in Lagos, Nigeria, and it's presenting itself with a 12% cash on cash and a 22% IRR. And you're saying, same tenants paying the same rent to a same quality sponsor. I'll buy some in the United States and San Francisco, but also buy some in Johannesburg or in Qatar or in Nigeria, because the dollars are real. I mean, it's not like they're different dollars. You're still getting US dollars. These are all US companies that are housed in those countries. So we never had that opportunity to see what else is going on around the world. We only had opportunity to see what's happening in the United States. And I think that RedSwan wants to change that.
So I think for an investor, investing in Nigeria or in Qatar or wherever, you might be hesitant because it's so far and you may not know exactly who's managing that actual investment. Like, you certainly see a lot of everyone's got their hand out. So how do you manage that process of property management, of having the contractors, all those pieces in place? Do you guys take care of that? Do you have somebody outside the firm that does that?
Well, all of them have to submit quarterly financial statements anywhere in the world, and usually the accountant's doing that as a Cushman Wakefield. I'm sorry, as a Ernst & Young or a Deloitte Touche who's doing their accounting. So having that clarity of seeing the financial statement for a property that's in Johannesburg and seeing that the bottom line is still profitable and that balance sheet is still good, that gives you some comfort. But also seeing that the sponsor has sponsor of properties throughout the entire region, and even in Europe and the United States, lets you know you're dealing with a very high quality sponsor. Because let's flip on the other side. You go talk to Hines, or you're talking to other major REITs, they have investments overseas too, right? So you just don't know about it because you're buying the pool. If you kind of looked at the entire pool of assets, you might find that they have assets outside the United States because they're generating good returns. But you never know that because it's really never explained to you. But if you are now shopping on RedSwan, you can see properties around the world and start doing a comparison as to which one is better. And I think that's a tool that, like I said, hasn't been available to investors, period, and now becomes, a basis of our platform.
That's really exciting. So you mentioned all these different countries, all these different places. What properties are live on RedSwan today?
So we have quite a few properties. We have, I'm proud, there's a Chevron asset, a pool of Chevron. So you know Chevron, Fortune 100 company. So we have 2 distribution centers from Chevron. We pooled together. It's triple net, so Chevron covers all the expenses. So it's just direct revenue coming to our investor. We like that because there's no debt on the asset, and they're giving you a nice 8.5% cash on cash return, and it's backed by one of the Fortune 100 brands. We also have, property similar to that. That's triple net, is an office building in Orlando. You know about it. It's Disney. So Disney has a 30-year option on the triple net lease. So you're actually buying a piece of Disney because Disney's going to be there for the next 30 years, and it's paying out an attractive yield on a beautiful asset. They're maintaining the asset as a beautiful asset, but you can rely on their check for the next 30 years. To me, that's and that also no debt on the asset. To me, that's a very nice investment you can just put under your pillow, stick in your digital wallet, and forget about it. It's just giving you dividends, right? So these are the type of deals I like. We also like new developments. We have, the Aviator Hotel, which is in Miami, and that's a Class A+ hotel they're building. The demographics for hotels in Miami are extremely well, especially when you layer in all the different high-level amenities. They tend to do well. So these are the types of properties we're putting on the platform. Or even, I talk about hospitality. We have some hotels that are in Indianapolis, Indiana. These are smaller, 125 to 175 unit hotels who are regional. They tend to perform extremely well because it's easy to fill them up, right? And they're brand new, so it's built without a whole lot of conference centers and 3-4 restaurants. That's the old model that's not working. They built the new model that they know works, and this is what we're offering to our investors. So these kind of investments is what we're looking at producing more of.
Okay, great. And so these are live on the platform now. Have you had success fundraising these assets, bringing new users onto the platform? What has that experience been like for you so far?
It's been working well. I think I said, we offer them not immediately so they can start buying today. We go through expression of interest so that we want our customers to tell us how many of these assets are on the market they're interested in investing in and how much. So when we get to a certain level of success, like 75%, then we can now go ahead, come back, collect all the capital and close out. So we're in that stage right now. We're giving us expression of interest, and I think that's going very well. We've got about, overall about $750 million of expressions of interest on our platform, and that keeps growing every day. But we see this as a way to show buying power into the billions, right? As time goes on, our clients are going to tell us what they want, and that's what we're going to give them, what they want. But we know that we have the purchasing power into the billions of dollars based on the confirmation of our clients.
That's awesome. That's really, really cool. So a lot of your properties are here in the US. Where are the markets that you want to expand to past the US based off your satellite offices you have so far?
Well, I don't like talking about the future, but this deal is pretty much inked, which is a $3.4 billion portfolio from Qatar. That'd be on our platform. We're going to make that into one portfolio. So you're buying the entire Qatar portfolio,
okay.
Qatar portfolio.
Almost like a REIT kind of a system, right? There's a lot of properties underneath it.
Yeah. So there's industrial, there's office, and there's multifamily properties, and there are a few retail properties. One huge, they call it a hyper center, like a large retail center that sells everything, like Walmart. So all those assets have been bundled together into portfolio. We had Cushman & Wakefield do valuations to know that we know the value of all those assets, and we're roughly at 3.4 billion. And so we're going to allow, for the first time, global investors in the US and from other parts of the world to be able to buy shares into income-producing Qatari assets, beautiful assets. So that's exciting, and I know that's going to turn on more opportunities, because once they see that we're successfully selling 3.2 billion in that particular market, Abu Dhabi, Dubai, Saudi, all those countries are going to want to do the same for theirs, and they're going to see RedSwan as a facilitator, because we know what we're doing. We're not like new people on the block. We have 65 years of collective real estate capital market experience, so we know what to go after. We know how to price it. We know how to give our clients a good deal.
If we look at the trends, do you think that the trends will be that people will want to prefer to invest in those kinds of baskets of assets in a specific, with a similar theme, or do you think that people are going to want to pick and choose the underlying investments they make?
I think people are, in terms of, lower end credit investors who are spending under $1 million. I think they want to make a safe investment, especially right now. Nobody wants to do anything that may be considered risky. And so putting them in a basket of assets gives you much more diversification and less risk. And so I would feel more comfortable telling somebody buy the pool of assets that are there and giving them a general pool of income than putting your finger on one asset. Even if you love that one asset, I think buy it in the basket because it'd be safer. I would have told you 2 years ago, yeah, go ahead, buy that high rise in downtown San Francisco. No problem. Guaranteed it's going to be good. Well, look what's happening in San Francisco right now, right? Not so good. And so that would have been bad advice. But if you bought a pool of assets, San Francisco, San Diego, and Oakland, and possibly, Iowa, right, in a basket, it's probably stronger than that one asset in downtown.
Certainly bringing down the correlation coefficient, to some degree, that's for sure.
All investors will tell you to spread your risk. Yeah,
so we may see that moving forward. There's more opportunities for that type of basket play. So that's all really, really cool. So this crowdfund, how long is it going? Can we talk a little bit more about your goals and the objectives and what's to come with that process?
So we're starting in September 1st, and we're going to probably run this through March. Hopefully we'll be done before March, but that's the technical time is the end of March. We'll close the Reg CF. We're thinking that along the line, we're probably going to identify some Reg D strategic investors coming on board. We're already talking to them right now. We just want to make sure that we don't waste our money. We're not spendthrifts. We're not out there trying to pay people $300,000 salaries. We're trying to grow the base of the business so that we're now relevant in the marketplace, right? And it's been hard for people to become relevant in the marketplace because one, they don't know the assets in the market, real estate. They don't have the sponsors that believe and trust in them. They don't have a full marketplace with a lot of assets to choose from. And so that makes it people scared to jump in because they say, I'm not seeing much yet. Let's wait till it gets a little bit more developed and I'll come in. So we want to make sure that we are more developed with relationships, with product, and with process, full scale process, because again, if you buy, you're going to want to sell. If you buy from RedSwan and we tell you have to go to another company to sell, that's not a good story, right? That sounds a little skeptical. So by building this and taking on this capital in this Reg CF, we'll fill out the full capability of RedSwan, which makes it much easier, much better for us to handle more volume of business, but also to take care of our customer that much better.
That's awesome. I think that you have such a measured approach in this market. It seems like you're perfectly positioned with some exciting properties and certainly plenty of experience to make that all happen. Finally, for the last couple of minutes here, this is going to put you on the spot a little bit. But let's talk about looking forward with the general market. How do you see a lot of this stuff playing out? Do you think that by driving a lot of this real estate traffic that we can take advantage of this current market and see improvements in these mortgage rates? Or will some of these trends present a bigger opportunity for people as the time goes on? What do you think about the next 18 to 24 months for this market?
Timing is everything, right? I mean, the most successful period in terms of profit for my clients in my career was 2008, 2009, right? The market froze up and banks were not lending because we had a financial crisis in the mortgage industry that spilled over to real estate, commercial real estate. People who bought with cash did extremely well. And I know because I helped them get in and helped them get out. 400 to 600% returns we saw during that time period. Why? Because they jumped in at the right time and they took advantage of it. From that point, it just gets smaller and smaller and smaller in terms of return until 2023, when interest rates now have jumped up 400 to 450 basis points. The profit's gone, right? Jumping in at that point, you've been waited too long. So timing into the real estate market is everything. And I see the forecast over the next 3 years of challenges in commercial real estate capital markets and raising capital. And so bringing this new form of capital, which is crowdfunded liquid capital coming in, giving them the option to be able to get out when they want to get out, is revolutionary and I think very, very productive for investors coming into the space right now. So I'm excited about bringing people into this because I think we're going to create a lot of wealth for people buying in these kind of low level price points.
Right. So we're gearing up. Now's the time to exert that leverage to be able to capitalize on some really exciting opportunities. So you think that the opportunity potentially is in existing properties or in newly built structures or both? What do you see as the future of the investment class?
Well, CMBS is coming for renewals, right? So that's, $800 billion this year and into half of next year coming due for recycle. They're not going to be able to get loans at 4%. That's going to be a big issue, right? There's banks that have already made loans and gone out of business because they made real estate loans and they can't cover them. And those properties are being sliced in terms of value. I'm seeing, discounts in office buildings in Manhattan, in Houston. They had a $250 million building sold for $107 million, right?
Wow.
These are kind of advantages that people can take right now, but you and I couldn't buy that, couldn't write that $107 million check.
Yeah,
ourselves.
I can't. That's for sure.
But if you're one of our members and you say, hey, I have 100,000 and we have, a few other who have capital, we can now collectively can take down the building at 107 and keep the sponsor in place to ride it back up, right? As opposed to taking it and then trying to find somebody and let it go further deteriorate. No, keep the sponsor in place, give them incentive and ride it back up. So right now is the time. And I think people have more capability to get involved that they never had before.
So where do they go? Where do they find out more? What's your platform? What's your website? Where do we find more about you?
Well, RedSwan.io, we made the name very simple. So RedSwan.io is where you go. Sign up for our marketplace. So that way you're always getting updates on new properties coming on board. That also gives you access to these assets. And once you go through the first hurdle of getting your KYC done, now you can buy in minutes. Now, when you see something you like, you can jump on and close that out in 15 minutes and keep on going. You can make that a practice every week is to spend a few $1,000s on real estate every single week. That's what we're bringing to the market.
Yeah, screw putting your money in another bank and getting some high money market fund just for them to go bankrupt like all the other ones we've seen. Get it into real estate where it's actually generating cash flows and it's even more money than what you're going to get from a bank account. I think it makes total sense, provided that you do your own research, you make sure you find properties that make sense. But fortunately, due to your team and your licensure, I think that actually adds a ton of validation by working with third-party firms, by being a registered investment advisor. You're taking the steps to do what you can to make sure that these things are safe and are going to be continuing to cash flow for a long period of time, finding high quality tenants and interesting properties. I think the platform is really, really exciting. So RedSwan.io. And I mean, we talk all the time. This is only the first of many pieces of content that anybody's going to see of us working together on this stuff. But thank you so much for taking the time. You are such a wealth of knowledge and absolutely an expert in this industry.
Hey, Cal, thank you, man. We've worked together. You're right. I like you because you understand the industry. You're in the industry. And so you can articulate even as well as I can, what's actually happening right now. More people need to know. So yeah, let's just make it simple. Right now is the best time to start buying real estate, and RedSwan is providing that access to the quality real estate that you want to buy.
Yeah, if you want to bet on the real estate industry getting tokenized and blowing up, invest in their crowdfund specifically, because that's really where, that 8% is nice for real estate. But if you're trying to get that 8x, that's where much more, hopefully, you can look to RedSwan and get involved with the crowdfund. They can get that stuff on the site as well as that RedSwan.io. They're going to get everything for the crowdfund.
You go to our website, it'll link you to invest in RedSwan.io for the next 6 months. But there's also going to be a lot of ads taking you right to our landing page so you can invest right now. So it's all set up. We have our brokers involved. We have our web platform. So you're going directly to RedSwan, investing directly in RedSwan stock and cutting out lots of middlemen. So yeah, I would take advantage of the opportunity.
Hey, you're leading by example, Ed. Thanks again for your time, and we'll talk to you soon.
All right, Carl. Thank you. Take care.
See ya.